if you're going to buy a rent roll, you need to really think through the return on investment associated with buying that rent roll. And then in addition to that, there's the actual merger of that rent roll into your business. So you might go through the whole deal process very successfully. You might be happy with the price that you've got and the other clauses that you've agreed, such as a retention percentage, etc., and those sorts of things, geographic restrictions. But ultimately, in the end, where I've seen a lot of these deals fail to some extent is that in this transition phase, there are issues with data and there are issues with retaining properties because both parties don't actually work together to achieve a successful sale.
Welcome back to the Property Management Podcast. I'm Kylie Walker. Thank you so much for being here. And today we're getting real about a topic that's often full of confusion, emotion, and massive financial decisions: selling, buying, or merging your rent roll. And if you've ever thought about exiting, scaling, or restructuring your business, you're probably already aware it's not as simple as just finding a buyer and handing over the keys. There are trust accounts, client relationships, data integrity, team dynamics, and 100 little details that can either make or break your deal. And I know this firsthand because last year I sold my own rent roll. And let me tell you, it was one of the most intense, stressful, eye-opening, and growth-filled experiences of my business career. There were so many things I wish I'd known going into it, from due diligence to navigating client transactions to extended extension periods and even managing my own mindset throughout the whole process. So in this episode, I want to bring in an expert who has been behind the scenes of countless rent roll transactions, James Dalton from HD&U. James has seriously got an impressive background. He's worked across global advisory firms, consulting practices, and held corporate roles, including during the global financial crisis, where he led the restructuring at Centro Property Group. His knowledge spans trust account audits, rent roll sale and purchase, financial restructuring, due diligence, and business performance improvement. He now leads HD&U, where he helps real estate business owners like us navigate the complex world of selling, merging, and scaling with confidence and clarity. So in this episode today, we're going to unpack the biggest mistakes people make when buying or selling a rent roll, what you need to have in place before you even consider it, and how to protect the value of what you've built. So whether you're thinking about selling or buying one day, or you just want to understand the process better, this episode is full of practical advice, real talk, and strategies to help you make smarter decisions. Let's dive on in. James, welcome to the Property Management Podcast. I'm so excited to have you here. Now, before we dive in, can you share with our audience a little bit about yourself and what you do?
Oh, hi, Kylie. It's really great to be here talking to you and your audience today. I guess I started my career a long time ago in accounting at KPMG as an auditor. And over the years, I transitioned into consulting and worked both across Australia and in America in financial restructuring during the global financial crisis. It was about that time, at the end of the crisis, that I shifted into real estate. My father had a business which was called Neil Dalton Consulting, and he primarily did trust account audits. And at the time, I was looking for a change. The work that I'd been doing with KPMG was really exciting work, but very stressful, long hours, often 6 days a week, into the wee hours of the morning. So it was a real necessary change for me at my age so that I could prioritise not only my health, but spending time with family as well. So I ran the Neil Dalton Consulting business for a number of years. And then 3 years ago, Stuart Hayes and I merged our respective businesses. And my business has primarily been trust account audits, forensic audits, working with national franchisors to do internal audits, and rent roll sales and purchases, whether that be due diligence or assisting businesses to get ready for sale, and actually working with business owners to sell their business right through the process to settlement. My business partner is more focused in the area of health and well-being. He has a software called Team Life. The Team Life program measures and monitors the health and well-being against 90 psychosocial behaviours. It's a really interesting tool. What it means is that the clients who use it is that we're able to monitor the health of their staff. And when there are red flags, we're able to drop in and have a conversation with those staff to see how they are. He also gets involved in team huddles. One of the challenges in the industry is often a lot of team leaders within real estate are promoted into that position. They don't necessarily have the skills and training to support them. And what he does is he assists them with developing those skills, whether it be how to run a meeting, how to provide critical feedback, etc.
I love it. It's really, you guys have got all aspects of real estate covered, from the financials to the health and well-being. And both of those are really hot topics at the moment. So let's focus on the numbers side of things for today's conversation, because a lot of agencies, we're seeing profitability is down, a lot of fees are being cut, and that is leading to, and this is my personal opinion, and correct me if I'm wrong, but it's leading to a lot of real estate businesses looking to sell or merge, or on the other flip side, buy. And I feel like we're seeing a lot more of that happening in the market at the moment. Is that a correct assumption for what you're seeing as well?
Look, I think that's a reasonable assessment. I think there was a bit of a drop-off in deal activity late last year and earlier this year, but certainly in recent times, there's been an uptick in activity. Now, there are a lot of drivers to people making the decisions that you're talking about. For some business owners, their decision to sell out completely is a function of new legislation. So they don't want to go through the new legislation changes. Like, for example, in Queensland, you have some new legislation coming into play later this year, and that will cause some anxiety for potentially the older agencies. So they'll look to sell out. Whereas the younger agencies are looking at things with a different lens, a different perspective. They're looking at growth opportunities and where those growth opportunities might be. I think if you're going to buy a rent roll, you need to really think through the return on investment associated with buying that rent roll. And then in addition to that, there's the actual merger of that rent roll into your business. So you might go through the whole deal process very successfully. You might be happy with the price that you've got and the other clauses that you've agreed, such as a retention percentage, etc., and those sorts of things, geographic restrictions. But ultimately, in the end, where I've seen a lot of these deals fail to some extent is that in this transition phase, there are issues with data and there are issues with retaining properties because both parties don't actually work together to achieve a successful sale.
So what are
Um,
some of the, yeah, so maybe let's touch on that then. What are some of the biggest mistakes then that you're actually seeing people who, and I guess let's talk about, well, we can do both, buying or selling,
yeah,
because there's mistakes that I'm sure both parties make.
yeah,
So,
absolutely.
well, maybe let's start with if you're buying a rent roll, because you're already on that topic at the moment. What are some of the biggest mistakes that people make when they go to buy a rent roll, and then we'll flip it to say when they're selling a rent roll?
Sure. Okay. Buying a rent roll without conducting any due diligence. There are still agencies that do limited due diligence. The reality is, if you're going to spend, say, $1 million or more on buying a rent roll, you need to allocate a certain amount of money to conducting due diligence, whether that's hiring someone like my company or alternatively doing the work yourself. If you don't do the due diligence to uncover what is hidden in the rent roll, then potentially what happens is you end up buying a lemon.
What are
And then
some of the
that,
things, sorry, just to interrupt you. Sorry, what are some of the things that you've seen hidden while we're just on this
sure.
topic?
Yeah,
Yeah.
sure. Things that are hidden. It's a good question. For example, a hot topic with respect to legislation is this concept of minimum standards or compliance certificates as they relate to gas and electricity. These are really basic things, but ultimately in the end, you're actually required by legislation to have these things and for these things to be updated every 2 years. So if you inherit, for example, If I just talk about Victoria, just as an example, Victoria has 14 categories of minimum standards. Now, if you buy a rent roll and you inherit properties and you find out that, for example, some of those properties don't meet minimum standards, then you run the potential risk of being fined $59,000 per property.
Wow.
So, but if you'd actually done due diligence, got an understanding of where the agency was with respect to their minimum standards, what the agency had done, like for example, had they contacted the landlord, had they spoken to the landlord, had the landlord responded? Because one of the interesting things is there are agencies now that are actually shedding properties because their landlords are not prepared to meet the minimum standards. Right. So that's a significant loss in value actually for some agencies. But so that's, I guess, that's an example of something that you might uncover by doing due diligence. Other things that you can uncover by doing due diligence are, for example, in regards to the agency agreements. So to actually complete a transaction legally, the asset that is being sold must be in the correct legal entity name. So what happens is with assets being bought and sold, these agency agreements are not updated. So if you're the buyer and you're borrowing the money from a financial institution, that borrower is not going to lend you the money against assets that are not in the name of the selling company.
Wow.
Okay. Yeah. So these things are quite it sounds quite simple, but in the cut and thrust of the day-to-day operations of a business where everyone's extremely busy, these things are often overlooked and they can cause you issues down the track when you're actually looking to sell. The other area that you see is that often some of these agency agreements are actually homegrown, for example. One of the things that needs to be in an agency agreement is the ability to actually assign the asset to another person. Now, it is still common to come across agreements where that clause is not inclusive in the agreement. I had a funny story. So I was presenting recently the Harcourts Victoria Ignite conference, which is their kickoff conference for the whole year on a range of topics. And right in the middle of the presentation, there was a fire alarm, and everyone left right in the middle of
Oh no.
the presentation. It was actually quite comedy. In fact, people thought that I had set the whole thing up as a part of my presentation, right, to prove a point on some of the things that I was talking about. Yeah, but
That's hilarious.
we got to the end in the end. I managed to finish it off, and but it was pretty funny actually. When you're presenting in front of like hundreds of people, those are things that it's the unexpected. It's so unexpected.
I know, it's terrifying enough, let alone something like that happening.
Yeah, so in an agency agreement, to actually transfer that agency agreement to another party, there needs to be an assignment clause. Some of the agency agreements that are used by agencies nationally don't have an assignment clause in them. So that can present an issue for the seller and the buyer. From the seller's perspective, it technically means that they need to get a new agency agreement either in their own name or alternatively, they need to get, as part of the deal, they need to agree with the buyer that they will have to get an agency agreement in the name of the buyer, right? Because the issue is you can't assign something that you don't own technically, right? So these things that, as I said earlier, these things that I'm talking about, they're quite pedantic items, but they can be showstoppers in a deal. I had a deal many years ago that I worked on, and I had told the owner over a number of years that he needed to update his agency agreements, and he chose not to. And then when he tried to do the deal, the buyer's lender wouldn't lend because the authorities couldn't be assigned to the buyer. So that presented a significant issue in that deal, which we did manage to actually resolve, but the deal took longer to complete, and it was quite painful in the end for all parties to complete that deal.
Yeah. So, what about then some of the other mistakes that people make when they're buying a property apart from the due diligence?
Okay, well, obviously you can pay too much for a rent roll. So you really need to do your own due diligence with respect to understanding what is market value at that time. And the other thing you need to take into account when paying too much is if you've done due diligence on the rent roll and you've identified many issues, then you shouldn't be paying the same price for that rent roll because it's not worth what you may have initially proposed to pay to the seller. So there is nothing wrong with going back to the seller during due diligence and saying, well, we've identified all of these issues. As a result, this is going to require us to undertake significant amount of work to clean up these issues. We want to renegotiate the fee. So that's one other option. Other mistakes I sort of also look at things like to do with the retention period and in addition to that, geographic restraints. So geographic restraints is an interesting area when you're negotiating between two parties, particularly when it relates to an agency that isn't shutting down. So if you think about it, if you're buying an agency and they're shutting the doors, then you really don't have any general concerns about them essentially trying to steal your asset back. Okay.
Do people actually do that? Like,
Yes, they do.
do
Yes,
they
absolutely.
really? Just
Yeah, yeah,
be
yeah,
ethical, people. Yeah, I
yeah.
just don't get that. But
I've
anyway,
seen, I've seen it a number of times where I've had conversations with owners where they've sold their rent roll, and actually the seller had another interest in another agency, and no one knew they had an interest in that agency. So the agreement that they put together to basically protect the asset that had been purchased, it fell outside the agreement and they technically couldn't stop this agency attempting to poach landlords from the asset that they'd purchased. Unfortunately, business can be brutal at times, and as keen as everyone is to grow their business or sell their business at a particular time, dotting the I's and crossing the T's is really important when it comes to putting these rent roll contracts together. And having the right lawyer as well, a lawyer that's actually experienced in doing rent roll deals. So there's a lot of lawyers out there, a lot of good ones, but there are also a lot of lawyers that are inexperienced in actually doing rent roll deals. And that inexperience can cause a number of things to occur. One, it can derail deals because some of the clauses that they write into the contracts are extreme, and or alternatively, they just miss things because they are not experienced enough in respect of the rent roll deal space. Generally, my advice is, and I see deals go sideways for a lot of reason, egos can get in the way in a deal. People can be arguing over small amounts of money. Potentially, it could be $20,000, $30,000, $40,000. Generally, in situations like that where two parties can't agree on the specifics, what I like to do is I like to sit down with both parties and just talk it through. Earlier this year, I was doing a deal and both parties had quite a turbulent history with each other. And the deal went sideways a number of times due to their turbulent past with each other. And so I had to step in a number of circumstances to sit down with both of them and just talk through the issues and work through just how important some of these issues were to each of them to nut out the agreement and get the deal done. Now, we got the deal done. Everyone was happy in the end and it was successfully concluded. But sometimes personalities, people are strong-minded. For me, I look at these deals from the viewpoint of if you're arguing about small amounts of money in the scheme of things, then it's a good idea to take a deep breath, step back, and actually think about what your personal objectives are. So, what are you trying to get out of this deal, whether you're the buyer or the seller? If you're the seller and maybe you're exiting the industry, do you really want to continue to run your rent roll, run that business, manage your staff, deal with the issues that presents? So these are things that you have to think about when you're potentially arguing over clauses in an agreement to do with a sale.
Are you feeling overwhelmed and thinking about selling your rent roll? Don't worry, you're not alone, and HD&U is here to help. Whether you're ready to sell now or you just want to plan for the future, the friendly and approachable team at HD&U makes the process simple and stress-free. Hello, yes please. With over 30 years of expertise, they're not just about crunching the numbers. They genuinely care about helping you maximize your agency's value and get the best outcome for you. Their sales readiness bundle is like having a trusted advisor by your side. They'll work closely with you to assess your agency's key factors, create an easy to understand heat map of your strengths and opportunities, and then sit down with you for a 90-minute workshop to guide you on what to do next. They'll look at everything from rent roll earnings and rent arrears to compliance and team performance and explain it all in plain English. If you're planning to sell soon, HD&U can even handle the whole process for you, from finding qualified buyers to negotiating the deal. Their friendly, professional team takes the stress out of selling so you can feel confident every step of the way. And to get started, simply book in a meeting with the team today. Their link is in the show notes. They're here to help you move forward with confidence. Let's be real. Compliance is one of the biggest challenges in property management, and it can be overwhelming to navigate. It's time-consuming, stressful, and let's face it, one missed compliance check could lead to serious legal and financial risks, and no one wants that. That's where Sensor Insure comes in. Powered by smart sensor technology, it offers highly competitive building and landlord insurance, bundled with an ecosystem of smart safety devices. These include tamper-proof smoke alarms and water leak detectors with automated remote testing and a 24/7 accessible audit trail. Yes, you heard me right. Sensor Insure is a game changer. It's always on and integrates seamlessly with your trust platform to streamline processes and provides live reporting across your entire rental portfolio. This ensures you're always meeting compliance requirements, giving you total peace of mind. No more waking up in the middle of the night stressed or worried that you've missed something or your team has missed something. So whether you're looking to improve your processes and efficiency, reduce stress, or protect your agency from risk, Sensor Insure has you covered. You really should see how it works. I totally encourage you to book in a free demo today by heading to sensorglobal.com or the show notes to learn more about their solutions and how they can transform your compliance game. So I can speak to that. I sold my rent roll last year. My retention was up in February, so not long ago. And there was in the air, and I can tell you their due diligence was absolutely incredible. They did it internally.
Yeah.
And it was like literally, they compared names on RP Data and Price Finder to names on our management agreements.
Yeah.
And if there was even a spelling mistake in the name, we had to redo that. Thankfully, there was only a few really minor issues in that due diligence process. But when it came to the end of the retention period, there was about 10 properties. They had lost 10 properties in that retention period.
Yes.
Would you believe one property burnt down the weekend before retention was up?
Wow.
Yeah, so that, and neither of our lawyers could tell us who was, of course, theirs said it was ours. They didn't have to pay for it. We were saying you have to still pay for it. And then there was other properties where the clauses that our lawyers had put in, they had to show the termination, the REIQ termination letter and the new management agreement signed with the new agency. The technicalities in that were really clear. But I sat down with the buyers, and I had done some work with them, gone into their office multiple times throughout the process, handed over properties, handed over difficult clients or difficult tenants, and did some training and consulting with them around our rent arrears process and our lease renewal process. So I developed a good relationship with them, And we sat down at the end when we were disputing over these 10 properties. I had a business partner and solicitors telling me, no, we don't have to pay for these properties. They haven't done what's in the contract. I sat down with them and we basically went through property by property and we
Yeah.
pretty much split it down the middle, 50-50. They took these ones. We didn't have to pay for these ones. We paid for
Yeah.
those ones. And the dreaded fire property, we just split down the middle.
Yeah.
So yeah, and that saved a lot of extra money on lawyers,
Yes.
expenses, and we both walked away feeling like we had a win. And I know that's not always the situation, but I guess my advice to anyone that is going through this buying or the selling process, try and develop a relationship and do an in-person handover with properties, have a good relationship around that throughout that retention period, because when you do get to the dicey end of the deal, if you've got a good relationship, you're going to get a much fairer and better outcome. So yeah,
Yeah.
your advice was spot on.
Yeah, I 100% agree. It's great that you did that, and it's great that both of you sat down and just worked through them one by one. And it really helps to build the rapport, because the reality is, you know that asset better than they do, and they can only benefit from face-to-face conversations with you and your team. Uh,
Absolutely. So you had just talked about the geographic issues.
yeah.
There was one other area that you were going to talk about as well on top of the geographic issues.
I was going to talk about retention.
That's right.
Yeah. So sometimes with respect to retention, obviously there's some back and forth with respect to what the retention period should be between a buyer and seller. A seller wants the retention period to be as short as possible, and the buyer wants it to be as long as possible. So that can lead to some interesting conversations between both parties. Generally, you need to come to what I would consider to be a fair arrangement. I do have people that call me from time to time and ask me, is 6 months a fair arrangement? And I said, no, 6 months is definitely not a fair arrangement. So something around the sort of 3 months is generally works for both parties. 3 months is a reasonable amount of time for the buyer to get their head around the rent roll. And look, I have done deals where the sellers had 2 months as a rent period, but generally those deals have involved staff from the seller moving to the buyer. So they were more than happy to have a reduced retention period in that circumstance.
Have you heard about extended retention periods? So I've had this in with my contract where we had the 3 month retention period. And
Yep.
then at the end of it, now got another 2 or 3 months. I can't remember the timeframes exactly, where there's a few properties where the owner might be selling or one of them might be knocking down their properties and building two new properties. So they've put those properties into, and I didn't know this before we
Yeah.
went into the deal. So is that a common thing and what should
Uh,
you look out for that?
yeah, look, it's a good question. I guess in my experience, I wouldn't say it's a common situation, but I can understand why there might be a need for it in the circumstances that you've described. Like, for example, properties that are undergoing some form of renovation, so they're not actually earning any income at that time, and the buyer may not be willing to pay for that property. So it could end up in a bucket like you described. I know that pretty much on all the deals that I've been involved in, there hasn't been something like you described, but there's a lot of smart lawyers out there, and I'm not surprised to hear something like that being included.
Yeah, absolutely. So let's flip it now and talk about when it comes to selling a rent roll. What are some of the big mistakes that people make when it comes to selling their rent roll?
Well, look, the most obvious mistake that people make is that they don't actually prepare their rent roll for sale. So what does that actually mean, preparing a rent roll for sale? So we all know that each year that your business gets audited by an auditor, right? I was having a conversation just the other day with a potential client. They've got in excess of a couple of thousand properties under management. And I asked them, and they're looking to get ready for sale. Okay. And I asked them, so what does your auditor do year on year for you with respect to your asset? And they said, oh, our auditor tests about 10 files. Right? I'm like, 10 files. Okay. I said, that's a very small percentage of your portfolio. And I said, how are you confident that this very large portfolio that you're managing is up to scratch to sell? And she was like, well, I think we have good standards in our business. And I said, yeah, but how do you know? How do you know that the rent roll is ready for sale? And she said to me, she said, okay. So she said, what would you do, right, in this particular circumstance? And I said, well, I said, if it was me preparing you for sale, I said we would go in a sort of phased approach, and we would agree that we would test a certain percentage of the portfolio, and we would cover a whole range of areas of testing. Some of those we talked about a little bit earlier with respect to compliance. In respect of earlier, you talked about potential undercharging of fees. We would look at the fee side of it as well. Do they have a signed agency agreement? Do they have a signed lease? Do they have a bond in place? If it's a commercial property, where is the bond? Who is holding the bond? Is it in an interest-bearing deposit account? Do the lawyers have it? Is it a bank guarantee? And for that matter, where is the information? Is it in a system? Is it in a drive? Is it in paper? Is it in all three places? So to actually get ready for sale, you really need to conduct your own due diligence on your business, because the buyer is going to do that due diligence. And I can tell you right now, there are a lot of deals, particularly in the state that I live in, Victoria, that are falling over. And they're falling over because the rent rolls are being found during due diligence to not be compliant with legislation.
It's crazy, isn't it?
Yeah,
Crazy, this
and
big asset they've built.
yeah, and in Victoria, there's been a lot of change to our legislation, and as a result of that change, there's been significant increases in penalties. And in the end, no one who's buying the asset wants to inherit an asset that they could potentially be fined for. So that's why due diligence and on the buy side and getting ready for sale are highly critical. It's a really critical piece of work that needs to be done, because the reality is everyone's working hard every single day and everyone's trying to do the right thing, but things do fall through the cracks. And
Absolutely.
unless you do that work, you won't know what's hidden in your rent roll. You won't know where the issues were. And like in that particular case, when I was talking to that particular business owner, we identified there and then that she has a substantial number of agency agreements that are in the incorrect name. And she didn't realize that would be a problem in terms of selling her portfolio.
Wow.
Yeah.
It's actually terrifying. So due diligence all the way, buying or selling,
Yeah.
and get somebody independent in. I can definitely attest to that as well. I have had lots of team members do audits and due diligence. It's just not the same as getting somebody in that's independent, that knows greater details about what is required in your business. And the other thing I think is really important with due diligence as well, and I'm going off on a tangent here, but is that it also, like you said, it helps you find those hidden income streams as well that you
Yes.
might not. I was so surprised when I had mine done about 2 years out from selling my rent roll. I had somebody come in and do a due diligence for me. And yeah, there was thousands of dollars with fees not being put in correctly and not being charged, and let fees and all different sorts of fees that I had missed because I had other people audit this over the years. But
Yeah.
yeah, so it's
Yeah.
really important, I think, in both ends of the spectrum. And what about what else is there when it comes to selling?
Oh, look, I think the other thing with respect to selling is part of it is educating the owner on the process and what the process involves. Sort of at HD&U, what we focus on is essentially taking the responsibility for managing that process away from the owner. So we essentially manage the process for the owner and involve the owner through the process where they're needed to provide input, whether that be in a meeting with a potential buyer or it be at the time when you're actually putting together what I call a teaser which sort of covers the financial aspects of the portfolio. Ultimately, in the end, selling the business can be quite stressful. And for an owner to sell the business and run the business at the same time can be very challenging. So having someone independent that can support you through that process and provide advice at timely points through that process, and to deal with potential anxieties that you may have, about doing the deal. Because for a lot of people, selling their business, it's a real emotional decision.
Yep, it absolutely 100% is. You're 100% right there. For me, the business was my identity for 15 years. So it was that mindset of who am I without this business?
Yes.
And then especially with my new businesses, am I still going to be credible? Am I still going to be relevant? Um,
Yes.
but yeah, it was a very emotional journey. And I think for me, I obviously had a broker, but I didn't really have, and I still had to run 300 properties at that
Yes.
time, pretty much on my own with a receptionist and an offshore support team. So you're right, getting all those ducks lined up and all the bits and pieces in place was really time consuming, really stressful. So I think a team like yours coming in and taking some of that pressure off the business owners from the start, from getting even from the preparation side of it.
Oh, yeah.
Because
Yeah.
at what time frame would you say you need to prepare for a sale? So I
Look,
kind of
I think,
started 2 years out, really,
yeah,
for
you
me.
started 2 years out, which is a long time in advance. So you were well ahead of the curve there. But often some people start this process 3 months before they want to sell. Personally, I'd be starting a year before before you want to sell, because depending on what you uncover through doing the internal due diligence, it may take some time to clean up some of the issues that you actually uncover. So you talked about fees, that sort of thing. That stuff is really critical. Like what we find, for example, in the likes of Property Me and Property Tree, is that property managers will enter fees as a fixed amount, so a fixed dollar amount. But that doesn't take into account the fact that, well, if the rent increases, then you're actually missing out on the additional bump that you would get, right? And those sorts of things, like doing all that sort of data cleansing, checking your agency agreement, checking what's in Property Me or Property Tree, that could add potentially another 5, 10 grand, right, annually. And then times that by the multiple, that could be another $50,000 that you could have received on the sale of your business. So all of these things take time, and in my view, you need at least a year prior to get ready, depending on the size of your portfolio. Like if you've got a very large portfolio, then you'd want to be starting more than a year before. That's my personal view.
Yeah, amazing. Thank you so much for sharing that with everybody. Now, could you share some personal development with our audience? A tool, a resource, a book, a podcast that you think will help our listeners?
Oh, that's
Put you on
that's
the spot.
that's a tough question. You've stumped me.
What's your favorite book?
Oh, my favorite book. I don't even have a favorite book at the moment, I've got to say. I've been so busy that I haven't actually been reading to the extent that I should be reading. But I used to like a podcaster in the States called Gary V.
Yep.
Right. Now, Gary V, he's a bit crazy and he's a bit out there. He's an entrepreneur and he's been highly successful. He's on the East Coast, I think in the New York area. And he talks about what it takes to be successful. And he talks about it in a very brutal, direct way. And I think what I liked, I guess, about his advice to people that are looking to be entrepreneurs or successful business owners is he talks about the concept of doing what others won't do.
Yep.
And he explains what he had to do to be successful and the commitment that he had to put in to his business to be successful, which involved no holidays, all this sort of stuff that he did to be the success that he is today. Now, I'm not saying that everyone shouldn't have holidays and they shouldn't spend time with their family, but I think it's important to understand as a business owner that what your objectives are and what success means for you. And that was really what he was saying. He was essentially saying to people that you need to define what success means for you, because for him, success meant big.
Yeah.
Right? And he was prepared to do anything that it took to be that successful person. But for others, success is having a healthy work-life balance.
Absolutely. He is amazing, and he does share some very blunt messages with everybody. And I think the other thing that resonates with that whole entrepreneur journey and, the success journey is that I think there's seasons as a business owner. So there's seasons like when you're starting up, like I'm very much I've just ended one and now I'm in a bit of a startup as well. You've got to put in a lot of work at the start to get that momentum and that success. And that might mean working longer hours and working weekends or whatever. But then you get to a point, I know certainly in my real estate agency, there was a couple of years there post-COVID where I was hardly involved in the agency at all. It was running like a well-oiled machine.
Yeah, yeah.
And then until it stopped, and then I had to go back in and have another season in there. So I think a lot of business owners and entrepreneurs don't realize that there is different seasons, and you have to do exactly like Gary says, what you want to get out of it, you've got to put into it. So
yeah. I actually hadn't thought about that concept of seasons that you're talking about there. That's a really interesting concept, because I think we've been talking about the rent roll space. Sometimes owners almost set and forget. Do you know what I mean? They set it up and then they don't check in on it to the extent that they should, given it's the largest asset they have.
Yeah, and that I was guilty of that 100%. And it was only when some people left my business and took a lot of my managements with them that I realized I'd taken my finger off the ball. I wasn't the primary relationship with my clients. And it was a big wake up call for me to reassess, how I was running things.
Yeah.
And went very much back into a season of being back in my business, being very present in my business. So now, how can our audience reach out with you, connect with you further?
Look, our website is dandu.com. That's the best way to reach us. Or we also have a pretty heavy social media profile on LinkedIn, Instagram, and Facebook. So I'd certainly be happy to have a chat with anyone about what we've discussed today or anything else.
Yep. Also the well-being side of things as well, I think is really valuable for our community as well. It's a big topic, and we certainly need to be having more conversations, and not just having conversations, but starting to implement more of those well-being things into our workplaces as well. So thank you so much for sharing your wealth of knowledge with us today.
Thanks, Kylie. I really appreciate having a chat with you today, and looking forward to another chat sometime in the future.
If you're ready to be a super organised, focused and productive property manager, buckle up, because Colmio is about to revolutionise the way that you work. Colmio is the driving force behind property management excellence in residential real estate. Now picture this, a comprehensive end-to-end system designed to be the beating heart of your property management tasks, manage your properties, owners and tenants, and handle payments, inspections, and even marketing listings without leaving the platform. Colmio is designed to be an all-in-one solution to all your property management needs. And here's the game changer. Colmio isn't just software. It's been awarded the most innovative prop tech scale up in 2023. Yes, you heard it right. Colmio has been recognised for their groundbreaking approach to property management software. How good is that? So property managers, whether you're a seasoned pro or just starting out, dive into the future of property management with Colmio. You can book in a demo with the team today and go in their weekly draw for a Prezi gift card worth $100. All you need to do is to head to the link kolmeo.com/thatpropertymum, and Kolmeo is KOLMEO. Can I ask you a quick favour before you leave this episode? Now, we all know how important reviews are for businesses these days, and mine is no different. If you could spare just a minute to follow, rate and review this podcast, it would mean a lot to me. In fact, what would get me super excited is if you share this podcast with someone in the industry who you think might need to hear some of the episodes right now. And if you'd like to find out more about working with me or any of the products I have to help you start, grow or scale your property management business, head to my website, thatpropertymum.com.au, or check out the links in the show notes.